Hi everyone, I'm Randall from Tax Samaritan. If you're a U.S. expat living abroad, you already know that navigating the IRS is a different beast when you're across an ocean. But if you've fallen behind on your taxes, maybe because of a move, a missed filing, or just the sheer complexity of expat laws, I have some good news for you. The IRS Fresh Start Program is still one of the most powerful tools we have to help you get back into compliance without losing your shirt. Today, I'm breaking down exactly how it works for expats and how you can use it to settle your debt once and for all. First up, let's talk about the Installment Agreement. This is for those of you who know you owe, but just can't pay it all in one lump sum. If you owe up to $100,000, the IRS is actually quite flexible. You can break that debt down into monthly payments for up to 72 months. Now here's the expat pro tip. If you owe $100,000 or less and agree to direct debit, you often don't even have to submit a detailed financial statement. Once approved, the IRS pauses those scary collection actions like bank levies or wage garnishments, giving you the breathing room you need to stay compliant while living abroad. Now, if you truly can't afford to pay the full amount, you might have heard of an offer in compromise or an OIC. The media loves to call this pennies on the dollar. While it's not quite that simple, the Fresh Start program has made it much more accessible. The IRS now looks at only 1 to 2 years of your future income instead of 5. But a word of caution, the IRS won't accept an offer just because you're asking nicely. They have to believe your offer is the absolute maximum they can realistically collect from you. For expats with foreign assets or income, calculating this reasonable collection potential is where things get tricky. So you definitely want a pro to look at your numbers first. What if your debt isn't the tax itself, but the massive penalties that have piled up? That's where penalty abatement comes in. If you've had a clean record for the last 3 years, or if something out of your control like a medical emergency or a natural disaster prevented you from filing, the IRS can waive those penalties. And for those worried about their credit, the Fresh Start initiative raised the threshold for tax liens to $10,000. If you have a lien, we can often get it withdrawn entirely once you're on a direct debit plan. This is huge for your credit score and your ability to get a mortgage or business loan back home. Before you apply, you have to meet the Fresh Start basic. No open bankruptcy cases, all past tax returns must be filed. Yes, even the ones from 5 years ago. And if you're self-employed, you must be current on your 2026 estimated payments. Basically, the IRS wants to see that you're trying to play by the rules moving forward before they give you a break in the past. Dealing with the IRS while living overseas is stressful, and a single mistake on these forms can lead to a rejection. At Tax Samaritan, we specialize in the unique challenges expats face. We know how to report foreign income and assets correctly, so your Fresh Start application actually gets approved. Don't let tax debt follow you around the world. Head over to TaxSamaritan.com and book a free 30-minute consultation. We'll look at your specific situation and find the best path to get you back to even with the IRS. I'm Randall. Thanks for watching, and I'll see you in the next video.